Get to know these top 5 Japanese candlesticks patterns before you start trading. Whether you are refining your strategy or just starting out, learning these patterns would help you stay in tune with the market and make strategic trades. I'm Alex and welcome to the Olymp Trade channel, the place to be if you want to improve your trading. Let's start with 2 fundamental patterns, the 3 white soldiers and the 3 black crows. These unique patterns are very easy to spot, so they are a great choice for beginners. The 3 white soldiers patterns is identified by 3 consecutive green candlesticks with long bodies and smaller wicks, indicating a pending uptrend in the market. This pattern usually indicates a shift in the market sentiment, suggesting that buyers are starting to gain control, so it might be a good time to buy or open an uptrade. The 3 black crows is made up of 3 red long-bodied candlesticks, with each one closing lower than the one below it. Both patterns indicate whether buyers or sellers are starting to gain control, so they can help you spot a good opportunity to open a trade that aligns with the active trend. Next, the Doji, a pattern that's frequently encountered in chart analysis. The word Doji comes from the Japanese phrase meaning the same thing. It represents a market situation where the opening and the closing price of an asset are nearly identical, resulting in almost tiny and almost non-existent body with long wicks on either side. This situation reflects the market indecision where neither buyers nor sellers are dominant. Whether you want to buy or want to sell, this pattern indicates that the market momentum is weakening. So whenever you encounter the Doji before opening a trade, pause, analyze the next candlestick to validate your next steps. Next up, the bullish and bearish engulfing patterns. Much like the Doji, they are super easy to spot even if you are new to technical analysis. Before I proceed, remember to hit the like button and subscribe to the channel for more trading tips and techniques that elevate your trading skills. The bullish engulfing pattern is a green candlestick that closes higher than the previous candle's opening after opening lower than the previous candle's close. One way to spot this pattern is when the green bullish candlestick completely engulfs or overshadows the previous smallest bearish candlestick. The bearish engulfing pattern emerges following a price increase, signaling an upcoming price decline. The initial candle in the 2-candle pattern is an upward green candlestick that often indicates a potential downward trend. It's a larger down candle that completely engulfs the smaller up candle. The morning star and evening star are the next 2 significant candlesticks patterns I'd like to highlight for you today. They are very helpful in spotting possible market reversals. The morning star is a 3-candle pattern that signals a bullish reversal, usually at the end of a downtrend. It starts with a large red candle followed by smaller bodied candle, often a doji, and concludes with a green candle that closes well into the body of the first. This sequence indicates a transition from bearish to bullish sentiment, and many traders, including myself, usually open a buy or up trade once the 3rd candle confirms the reversal. The evening star, on the other hand, is the bearish version of the morning star because it usually shows up at the peak of the uptrend, indicating that buyers may be losing control and sellers are about to take over. Our last pattern for today is the shooting star, a distinct bearish reversal signal that often appears at the peak of an uptrend. The shooting star pattern is characterized by a small body and a longer upper wick, indicating that price attempted to push higher but was ultimately rejected. This pattern indicates that bulls may be losing steam, indicating a shift in the trend's direction. When you see it, wait for the next candle to validate this pattern before taking any action. Getting to know these top 5 candlesticks patterns might come in handy, especially when you're analyzing the market's behavior in search of good entry points. If you want to learn even more about patterns, I strongly recommend that you check our previous video on this topic. You can find the links to the video in the description below. By the way, do you have any favorite patterns? Which patterns do you find easiest to remember? I'd love to hear your thoughts and might even highlight some of your comments in my next video.